1935 under CBI Act 1934, as a private bank whose authorized capital was 5 crore at that time. In addition to normal banking business, two other tasks were also assigned to RBI to control the regulate the banking in India to play a role of government bank. The Reserve Bank of India was nationalized on January 1, 1949, and under the terms of the Reserve Bank of India Transfer to Public Ownership Act 1948, the Reserve Bank of India was vested with major powers for the supervision of banking in India as the central banking authority. Task or functions of Reserve Bank of India. If we talk about the issue of currency note under Section 22 of the RBI Act, bank has the sole right to issue currency note of all denomination except 1 rupee coin and notes. The 1 rupee note and coins, small coins, issued by central government of India, and their distribution is undertaken by RBI as the agent of the government. The RBI has a separate issue department which is entrusted with the issue of currency notes. Banker to the government. The RBI acts as a banker, agent, and advisor to the government. It has obligation to transact the banking business of central government as well as state government. For example, RBI receives and makes all payments on behalf of the government, remits its funds, buys and sells foreign currencies for it, give it advice on all banking matters. RBI helps the government, both central and state, to float new loans and manage public debt. The bank makes way and meets advances of the government. On behalf of the central government, it sells treasury bills and provides short-term finances. Bankers bank and lender of last resort. RBI acts as the banker to the other bank. It provides financial assistance to scheduled banks, state cooperative banks in the form of rediscounting of eligible bills and loans and advances against approved securities. RBI act as a lender of the last resort. It provides funds to bank when they fail to get it from other sources. It also acts as a clearinghouse. Through RBI, bank make interbank payments. Control of credit. RBI has power to control the volume of credit created by banks. RBI, through its various quantitative and qualitative techniques, regulates total supply of money and bank credit in the interest of the economy. RBI pumps in money during busy season and withdraws money during slack season. Exchange control and custodian of foreign reserve. RBI has the responsibility of maintaining fixed exchange rates with all member countries of IMF. For this, RBI has centralized all foreign exchange reserve. Forex, RBI sanction as custodian of nations foreign exchange reserve. It has to maintain external value of rupees. RBI achieve the same through appropriate monetary, fiscal, and trade policies and exchange control. Collective and publication of data. Collection and publication of data. RBI collects and compiles statistical information on banking and financial operation of the economy. The Reserve Bank of India's bulletin is a monthly publication. It not only provides information but also results of important studies and investigations conducted by our Reserve Bank are given. The report on currency and finance is an annual publication. It provides review of various development of economic and financial importance. Regulatory and supervisory function. RBI has wide power of supervision and control over commercial and cooperative banks relating to licensing, establishment, branch expansion, liquidity of assets, management and methods of working, amalgamation, reconstruction, liquidation. The supervisory function of RBI have helped great in improving the standard of banking in India, to develop our sound lines and to improve the methods of operation. Clearing house function. RBI acts as a clearing house for all member banks. This avoids unnecessary transfer of funds between various banks. Development and promotional functions. RBI has helped in setting up Industrial Finance Corporation of India (IFCI), State Financial Corporation (SFCs), Deposit Insurance Corporation, Agriculture Refinance and Development Corporation (ARDC), Unit Trust of India (UTI). These institutions were set up to mobilize savings, promote savings habits, to provide industrial and agricultural finance. RBI has a special Agriculture Credit Department. Agriculture Credit Department (ACD), which studies the problem of agricultural credit. For this, regional rural bank, cooperative, NAMAD, etc. were established. The RBI has also taken measures to promote organized bill market to create elasticity in Indian money market in order to satisfy seasonal credit needs. Thus, RBI has contributed to economic growth by promoting rural credit, industrial financing, and export trades. Structure of Indian banking system. Currently, the Indian banking sector is broadly classified into scheduled bank and non-scheduled bank. All banks which are included in the second schedule of the Reserve Bank of India Act 1934 are scheduled bank. These banks comprises scheduled commercial bank, scheduled cooperative bank consists of scheduled state cooperative banks and scheduled urban cooperative banks. Scheduled commercial banks in India are categorized into five different groups according to their ownership and nature of operation. Let us discuss them. Scheduled banks are those which are entered in second schedule of RBI Act of 1934. They are eligible for certain facilities. All commercial banks, Indian and foreign, regional and rural banks, and state cooperative or scheduled banks. The schedule must have paid up capital reserve of not less than 5 lakh. It must also satisfy RBI that its affairs are not conducted in a manner detrimental to the interest of the depositor. Non-scheduled banks are those which does not include in the second schedule of the RBI Act of 1934. The number of non-scheduled banks is declining as many of them are attaining the status of scheduled bank in 2008. Cooperative banks are cooperative organizations which are governed by the Cooperative Society Act of 1904. Cooperative banks usually cater to the needs of the agriculturists. Cooperative usually cater to the needs of the agriculturist. Commercial banks, they are joint stock banks which are governed by the Banking Regulation Act. Commercial banks mostly provide short-term finance to industry, trade, commerce, including priority sectors like exports. Public sector banks are banks in which more than 50% of the shareholding and management control, indirect or direct, vested with government or its representative organization. Public sector banks have the dominant position in terms of business. They are accounted for 71.9% of assets, 76.6% of deposits, 75.3% of advances, and 69.9% of investment of all scheduled commercial banks as at end of March 2009. Among the public sector banks, the State Bank of India Associate has 16,294 branches. Nationalized Bank had 39,703 branches as on June 30, 2009. Private sector banks are the banks in which more than 50% of the shareholding and management control vested in the Indian citizens. Vested with the Indian citizens presented a total number: old generation bank, new generation bank, domestic bank, foreign banks, regional rural banks. These are the banks. So that's all about this video. If you find it useful, access